The US dollar has fallen to its lowest level in years. The concerns keep increasing about the US economy. Investors are increasingly worried about the purchasing power of the US dollar. On the other hand, the price of gold reached record levels when it reached a trading price of $1,943 per ounce, the highest price since September 2011. But why is the price of gold going up? Hi there, welcome to Investors Game. Today, we're gonna talk about how to invest in gold during COVID-19. And give us a thumbs up, that helps us a lot. So let's get started. Why gold price is going up? Well, gold tends to move inversely with the US dollar, so a weaker dollar means an increase in the value of gold. Therefore, gold is seen by some as a safer investment than other assets in certain times. Because in the stock market, the gold is represented as XAU USD. As the dollar drops in value, the price of gold tends to increase. With investors nervous about the future of the economy and power of the US dollars, experts predict that the value of gold will increase further. Some analysts believe that the price of gold will even reach $2,000 per ounce. But here's another question: how can I start investing in gold? Well, gold is one of the world's earliest forms of currency. There are now multiple ways to hold the precious metal for investment purposes. Before investing in gold, every investor should first decide why they want to own gold or why do they want their money to do. Here are a few ways to get started. Buy physical gold. Physical gold bars and coins is the most traditional way to own gold. It's the very liquid and easy to buy in one place and sell in another. But buyers should be aware of the additional costs, such as insurance and storage. Another way to invest in gold is buying ETFs and ETC. ETF is an exchange-traded funds, and ETC, an exchange-traded commodities, are vehicles that allow you to track the underlying price of gold without having to physically hold the asset. So, ETF is practically a stock that contains companies that value the same price as gold. If you want to play the gold price, the ETF option have been popular. Buy gold-related stocks. Companies directly linked to gold, such as gold miners or gold producers, are another way to hold gold, as they tend to mirror its performance. However, they are also susceptible to stock market swings. In a bull rally, they do very well, but they are susceptible to pullbacks. And the last but not least, buying alternatives. Alternative vehicles such as gold-backed cryptocurrencies or foreign exchange trades offer another way to buy into gold, though these are typically for more experienced investors. Here we got pros and cons of the gold. First pro, it's viewed as a safety trade. Gold has always been viewed as a safety trade, primarily because it is a hard asset, and if you buy physical gold, you cannot lose your entire money because at the end, you can make a ring from a gold bar. Number 2, inflation hedge. Investors buy gold today to safeguard speculated inflation in the future. Number 3, easy to turn into cash. Gold is an asset can easily be liquefied in return for cash. If an investor plans to transfer his fund to another asset in the future, most often, his or her first instinct is liquefying gold. Number 4, portfolio diversification. The key to diversification is finding investments that are not closely correlated to one another. Gold historically had a negative correlation to a stock and the other financial instruments because, as we saw before, most of the time the gold price is based in US dollars. Gold has no counterparty risk. Physical gold cannot go bankrupt or broke. Gold bullion will never default on promises or obligations. Here's some downsides of gold investment. Number 1, non-income. Because gold is a metal that you cannot rent, you just can sell it and buy it. Gold is not like a house that you can rent and get your money back. Or when you buy a stock and you receive the percentage of the dividend. In gold, you only make money until you sell it. Number 2, ongoing cost. Remember that if you want to invest in physical gold, you have to storage and pay insurance for that. Number 3, low risk as low reward. Remember, gold is something that its volatility is not too high. We're not gonna have the same returns that with Bitcoin, for example, that we can see that this year it's up for more than 200% since March. Number 4, risk. Remember, when you invest in gold in the stock market, it comes with the same risk that investing in any other company. So investing in gold doesn't guarantee you that it's a safe investment. But before we move on, let's recap what you learned in this chapter. First, you learned gold tends to move inversely with the US dollar. Therefore, gold is seen by some as a safer investment than other assets in uncertain times. Next, some analysts believe that the price of gold will even reach $2,000 per ounce. Next, you can invest in gold buying physical gold, but remember, it costs you money for insurance and storage. Next, you can buy stocks if you don't want to pay for insurance or storage, such as ETFs or ETC, stocks related to gold, or the pure gold stock. Next, gold is easy to turn into cash because it's a famous asset. Some banks accept gold as a payment. Next, there's no income with gold. Remember, gold is not like a house that you can rent. With gold, you just make money until you sell it. Well, with that in mind, we can go to the charts. Alright, here we got the chart of the gold. And first of all, the first thing to do, we will mark the highest gold price. So, we go to the past to have an idea if the price is expensive or cheap. And then, we base our decisions in these sums. So we mark the top of the candle to the bottom, like this. And after we mark the highest gold price, we see that we got some examples here of how of this sun work. We see when the market dropped, they tried to hit the same level, but the price is rejected because we consider this sun as an expensive price, but buyers are maybe not interested in buying gold right now. So here is a good opportunity to sell the asset. With all of this in mind, now we can go to the present and check how this sun will affect the market. Here we can see an uptrend when the price took several breaks. In this case, those breaks are called pullbacks, where the price decided to stop for a little bit and kept going up. So every pullback that we will find, we will take it as a zone where the price could bounce. These zones, most of the time, there are high probabilities to sell or buy. In this case, we got an uptrend, so the probabilities are in buying this asset. So what am I expecting from the market right now? Well, there are two scenarios that I believe. The first scenario, the market could hit our pullback that we got here, but as you can see, there's a lot of pullbacks during the uptrend. And how do you know which one is the right? Well, usually the market always uses the closest sun, and because this candle is short and strong, it's considered an important pullback. What we do is mark the pullback. We start marking from the top to the bottom, and we wait until the market hit the sun so the market can collect more buyers and increase the strength of the movement. Alright, now what's the second scenario? Well, the market could never hit the sun and keep increasing its price, but we don't buy because we see the price going up. That's not the right thing to do. We're gonna buy when the market leaves a zone when the price can retest and keep increasing. So for example, the market could stop at this point and leave a pullback, and then we would use the pullback to buy a position because it's a new pullback, it's a fresher pullback. So with all of this in mind, I'm 100% waiting for a buying position because in one side we got the dollar getting weaker, so that's one advantage. So this makes the gold go up. And on the other side, we're expecting another crash because every day there are new cases of coronavirus. So we cannot expect that the market will keep doing great like it's doing right now. If you like this video, don't forget to hit the like button. Let me know in the comment box, would you invest in gold or not, and why? Subscribe to my channel because every week I'm in YouTube with new content, and do not forget to activate the bell so you don't miss any of our videos. See you next time.